Good morning, everybody. Welcome to the latest edition of Talking Ball. It's the 22nd of September. I'm Joe, joined by Steve and Jamie this morning. Good morning, gentlemen.
Good morning, morning. Been a while.
It
Morning.
has been a while. Feels like it's been ages. But I'm very pleased to be back, sat on a nice
in,
chair, not
in
rushing
front of a
around
desk.
anywhere, in front of a desk. Yeah, it is great to be back. And yeah, it's been pretty tough out there by the looks of things in the old markets. It's not been straightforward at all, has it?
No, it definitely feels like we've got a big volatile move ahead of us, and I think obviously the interest rate decisions are front and center, obviously.
Yeah.
So US have already sort of dived in and set their stall out.
Yeah, so I guess that brings us on to the market highlights then. Let's just have a quick whiz through those. So as Steve mentioned, the Fed hiked the interest rate yesterday to 75 basis points, which I think was pretty much in line with the expectations. In a unanimous vote, the statement noted that inflation remained elevated and that the central bank was highly attentive to inflation risks, with interest rates set to increase further. The new set of projections downgraded the growth outlook, with inflation forecast slightly higher. The end of 2022 projections for the fund rates were increased to 4.4% from 3.4%, and that's in June. And the forecast, in June, raised to 4.6%. But overall, rates are expected to decline over the following 2 years. So we're not expecting to get any rate cut until basically 2024, which is not great, is it?
Well, it's not so bad if you're a saver.
No. Obviously, but then obviously that's going to impact the markets because nobody's going to want to put their money to work in the stock market if it's 4 or 5% rate of return in your bank account.
Yeah, absolutely. Yeah.
So Jay Powell warns of more short-term pain. He reiterated the need to combat inflation and that the Fed will be moving policy to a level that is sufficiently restrictive. He added that inflation risks are still skewed to the upside, but the bank will want compelling evidence that inflation is declining, with the probability that restrictive policy will be needed for some time. In this context, Powell warned that it is likely that a period of substantially slower growth was quite likely, and it would be painful to get inflation down while labour market conditions continue or may soften. He did, however, add that it will eventually be prudent to slow the pace of increases. But again, we're talking not until 2024 potentially. No change from the Bank of Japan. They made no changes to their monetary policy overnight, with interest rates held at minus 0.1% and the 10-year bond yield target of 0.1%. Still more talk of intervention there on the Japanese yen, so we'll wait and see what happens there. The US dollar posted a fresh 20-year high yesterday following the Federal Reserve policy decision, with overall yield spreads continuing to underpin the US currency. So it pretty much remains the number one game in town, the US dollar. No sign of it slowing whatsoever. We also saw dollar yen jump to a fresh 24-year high above 145, and the euro US dollar pair also traded at a fresh 19-year low. So all eyes today on the Bank of England. They face a tough rate call as well. They will announce their latest policy decision today. The bank faces a very tough call given overall pressures on the economy. Overall expectations are that interest rates will be increased by at least 50 basis points, and there is some speculation that it could be 0.75. The Swiss National Bank are expected to hike rates again. The consensus forecast there are that they're expected to raise rates by 75 basis points, taking the overall rate to 0.5% at the latest policy meeting, and they will be closely monitoring the rhetoric around intervention and whether or not we will see the Swiss National Bank step in at some point. There has been increased demand for the Swiss franc in recent sessions due to the Russian President Putin announcement of military mobilization triggered renewed demand for the Swiss franc, with Euro Swiss therefore sliding to a fresh 7-year low. So all pretty doom and gloom out there, sadly, at the moment, and doesn't appear as though there's going to be any really good news on the horizon for some time. So, we do need to be aware of this, and we obviously need to have a plan in place to try and navigate around the markets as they stand at the minute. So, Steve, do you want to kick us off with a look at some markets? We start off with cryptocurrencies.
Yeah, I'll just share my screen. Look at Bitcoin, obviously the leader. really sort of drilling down to the weekly chart, and one of the technical indicators we can look at is the volume indicators, and we can see I've highlighted it here on the weekly chart. We can see just really where the volume of trade has taken place. The majority of the volume of trade has taken place. And I'm only going back to 2016. It will adjust if you go back to the start. It sort of like shows that the majority of trading has taken place around about the $1,500 mark in Bitcoin, US dollar. But if we take it into when it became really an asset which was more traded, that sort of like elevates up towards the 8,500 level, and that's a level that I think we will see at some point in the coming weeks stroke months. We're hanging about this area of support around about the 17,600 range to up to just around 20,000, just slightly above that, which was previous levels that we've seen of interest. Originally, the all-time high back in December 2017. The swing low that we got in June this year got down to 17,600. That's why I've highlighted that. Last week's candle, we can see quite clearly, was pretty bearish, engulfing candle, and yeah, it's sort of looking pretty ominous. And obviously, with this dollar strength, Bitcoin's priced in dollars normally, or USDT, but it's all related to the dollar, and dollar becoming stronger is having an impact on this and sending prices lower. So I do expect some sort of vacuum between the 17,600 and around about the 13,500 level. So I think we could have a really fast move there, but I think the ship should be steadied from around about that 13,000 level all the way down to maybe 8,500. So looking, that's my technical outlook for Bitcoin over the coming weeks or months, whatever. We saw the spike up yesterday after the Fed. All of a sudden, things, when we started reading the detail of Powell's comments, the market sort of turned quite viciously. Took a few shorts out, a few weak shorts out, got up to just below the 20,000 level, spiked higher there, but then that soon gave up those gains, and we made a fresh multi-week low at 18,166. So further downside targets there. One crypto that I'm looking at is Ripple. It's one of interest to me, and that's painted a slightly different picture. If anything, it looks to be really bottoming out here. I still think there's rocky times ahead, because I think these alternative coins do get influenced. If Bitcoin does have some sort of collapse, it will naturally impact on the other coins. But for me, XRP looks pretty interesting as we look at this maybe potential inverse head and shoulders formation that's forming on the short-term chart. Ethereum is obviously another one which is very popular and used a lot of the time in as a method of payment in gas fees for the NFTs and things like that. So, but that's under pressure, and that's down at levels of previous resistance. You can see going all the way back to June, July, and into mid-July, we had a really sort of decent level of resistance here, where prices broke up from, found support, and we found support this week, but we've sort of broken through it. So definitely a level to watch is around about where we're trading now, around about the 12.75 area. If we do get a major close, daily or weekly close, below this level, then I wouldn't be surprised if we see further downside. The next level of support in Ethereum is around about the $1,000 mark. That's the major level. So there ones to watch out for, and yeah, be very careful with those types of assets. Also, one market that's been of interest to me is gold, and we're sort of breaking down. Let me take you to a daily chart on gold. We are forming this double top formation, and the level of support, or the neckline, is around about where we're trading now. So for me, if we get a clear break and a close on a weekly basis below the 1650 level, I think we could see some more downside, and quite quickly. The initial levels of support below around about the 1560 level, and then down to 1440. Measured move target for the double top formation is all the way down at 1365, which was, if we go all the way back here, which was a key area of resistance through 2016, 2018, and we broke it finally in 2019. So for me, that seems like a natural target, 1365 to 1375. Quite scary thinking about those sort of like really distant levels that we're looking at the moment. Silver holding up as well around about support. Again, we can see that back in June 20 we got a sort of like we formed some decent resistance, eventually breaking up, and that should turn that level into support. It's quite a wide range though, between the $17 and the $18.30 level. The lowest we've been is down to around about 17.55, and that was at the start of September. So we spiked higher, trying to hold above this support area, but really seems to be under pressure. So that dollar strength is just impacting on these types of assets. So yeah, doesn't look great on that aspect either. One of the things I suppose I could look at is, as we saw the distribution in volume on Bitcoin being really low, if we look at the weekly chart on gold, we can see it's maybe a slightly different picture, and we can see that sort of like support where the most of the volume's taking place. If we go back, I mean, this is going back to 95. We can go back further than that. We can go back a long way, but it's sort of, the levels are sort of have more normal distribution, I would say. So that's coming in at around about the 1273 levels. So yeah, that's a good way of sort of really finding out where the overall value has been historically, and potentially that will end up being some kind of support. More recently, obviously, if we look back only over a few years, we can see that it's a lot higher than that, around about the $2,000 level. But yeah, you can see how important this support is. We're breaking below it. If we get a weekly close below that level, then I think we're in for a really bitter winter. Which obviously leads me on to crude oil and natural gas quite nicely. Under pressure again. Crude oil is trading at 82.75. We're back down through support. We had this impulsive drive higher from well, we had negative prices on the physical market. We got down on this chart, we got down to $10 as a low, and we've had this impulsive drive higher and really getting this ABC correction. We're overextending to the downside. So is this turning into an impulsive move downwards potentially? I suppose we'll leave this up to Vladimir to sort of like let us know where this is going to go. But yeah, at the moment, really under pressure. It's back below the high of the wave 3, and just doesn't look like it's going to slow down at the moment. So again, dollar price is impacting on this, causing it to weaken. 81, around about the $81 level is where we see support at the moment. Let's get rid of the that's a bit distracting. Looking at the shorter term levels, let's look at the daily chart to see where we've been up to. Yesterday we saw that spike higher, took out the previous resistance at $86, and then reversed really sharply, and we're on the back foot this morning. So support coming in at 81.70 and $81. And if we want to try and get some sort of Fibonacci idea of where we could find some support, really we're through the 61.8, so pretty negative, and maybe looking at $76 for the next level of support. So yeah, back foot on the WTI crude oil. Natural gas has held resistance around $10, and we're projecting lower. Looks like a bit of a head and shoulders formation if you want to take it from here. Nice little, oh, that's not, let's get rid of that. That's not the right drawing tool. Here's the left shoulder neckline, nice classic one really. and we are below the neckline. Now, if we do get a clear break and a close below 755, then further downside is expected. Taking a measured move target, looking at something like that, maybe all the way down to this area that we had the swing low from before, around about the 540 up to 560 level. That's the measured move target on natural gas.
That'd be good though, wouldn't it?
It would be good. Well, yeah, but it's all about timing. It might come in the Easter time sometime. So yeah, I can't really sort of like give a. I mean, I suppose if this move has taken place since like July, you'd like to expect it to sort of happen before winter, but yeah, who knows?
Cool. Is that all the commodities, Steve?
Yeah, that's it. Yeah.
Superb. Okay, thank you very much. So yeah, dollar index is obviously front and center of everything at the moment. It really is the number one trade out there at the moment. The only real asset that's delivering, the kind of returns that investors, like to see. And this is a weekly chart, and we can just really highlight the sort of parabolic move really that's taken place since mid 2021. We've got this sort of curved line that's just really holding all that price, and we've got a fresh breakout to new highs that has been seen overnight and into today. So that red line, actually, if we go all the way back to 2001 on the weekly chart, we can see there was a swing low there, which should have acted as resistance, but obviously it's happened a very long time ago. We've sailed through that with relative ease. We've got the blue line just below that, which is the 78.6% Fibonacci retracement level of this entire move here. So from the highs back in 2001 down to those lows in 2008. And we sailed through that as well. So no signs of this slowing. And I don't know what the catalyst is going to be to stop this, to be honest, at the moment. It's really looking very strong. The next major levels are all the way up here at 120.50. There may be some other levels in between here that may attract some short-term selling, but overall it just looks bullish, and I just can't see it slowing down. And of course, it's having a massive impact on every other currency that it's linked to. So dollar index up by 0.3% as things stand. If we take a look at Aussie versus the US dollar, pretty sad picture there. This is again the weekly chart, breaking down all the time to new lows and no signs of it slowing. If we're going to try and find some levels to maybe stop this short-term rot, then we'd maybe look for the fib levels from the lows in March 2020. And we are fast approaching the 61.8% fib level at 0.6461. So that would be a short-term target there for me on Aussie versus the US dollar. But clearly the trend remains lower. We're in a process or a sequence of lower highs and lower lows. If we take a look at Euro versus the US dollar, again, very sad picture here. We had the 78.6% fib level that was doing a pretty good job, but prices continue to be trading within this bearish channel, and there is no signs of it slowing. This is fresh 19-year lows now that we're seeing on Euro US dollar. Is it 19 years? Or is it going? It looks even further to me there. Where are we going? Back here. Yeah, so 20 years almost. In terms of the next level, we've got a green level there at 95.95. That is a previous high from back here in 2001, which did a job of support, and now it's going to be retested for the first time in a very long time. So no signs of this slowing either. Still looks pretty sick, and again, I don't know what's going to stop it. I think if there is to be any sort of bottom, it is going to take a long time to play out. We're going to get prices start to plateau, start to go a bit more range bound, and then maybe we'll start to see a bottom emerge. But there's no signs of that happening, sadly, at the moment. Looking at cable, again, just really rough stuff, to be honest. This is breaking down to new lows, taking out this low from the pandemic lows back in March 2020, smashed through it and showing no signs of slowing. We've got a long-term bearish channel which may offer some support. That is roughly coming in at 110.30, but we are now at lowest levels on this, going back to that vintage year of 1985. So what is that? I'm 37, so 37 years worth of price action there. That we're testing those lows. The ultimate low of that level was actually in January 1985, and that came in at 105.22. Steve and I, while we were away yesterday, were talking about this potentially being a huge double top on cable. Let's just try and mark this up here. So one of the tops being here. Let's clone that and put the other one over there. So the neckline of this double top would have broken on this move below the pandemic low. And then if we're talking about where that suggests that the price will go to, if we were to use that as a measured move target, that comes down at 84.38, which I don't think we've even got it on record going back that low.
No, we haven't.
So, there's not a lot of positive things I can say about this at the minute. While the dollar is on this rampage, it's going to be more of the same. But markets don't go down forever. But don't be trying to pick the bottom on this at the minute, because if you pick bottoms, you get smelly fingers, right? Um, let's have a look at some of the other dollar currencies. So New Zealand dollar versus the US dollar. That sailed through the 78.6% fib levels, put up literally no fight whatsoever, no support there on offer on the weekly, and we look to be targeting these lows down at the pandemic lows at 54.69. So you wouldn't be backing against that at the moment. More downside looks set to happen there. Let's take a look at dollar CAD. We can see that following this big wedge pattern that played out on the weeklies, it finally completed back in mid 2021. Prices haven't really sort of gone too far in the aftermath of that break. A lot of range bound price action, but now it's really starting to pick up some steam. Big move to the upside over the last couple of weeks. If we take a look at some upside targets, then we can use the fib levels. We're fast approaching a 61.8% fib level at 36.51. Look at dollar Swiss. So the Swiss franc has emerged as a bit of a safe haven in recent weeks. So there's a bit of a battle going on here between who's the safest of the currencies to own. Obviously, the dollar index is at a huge high, so maybe more value in the Swiss franc at the minute, and maybe that's what we're seeing here on this chart. And if we take a look at dollar yen, I mean, this is just insane, really. It's just up at new highs again, hit 146 and showing no signs of slowing. We talked about there being some sort of intervention months ago, I think, when it was probably around sort of 130, and now it's at 148. At some point, I think maybe they will step in, but they haven't yet, so maybe they won't. I don't know.
I mean, these are levels that we sort of haven't seen since '98, and but if you look at the chart overall, Joe, you can see, go back even further to sort of like the 1970s, where dollar yen was trading around 300.
Wow, yeah. So this is this high here was 1982. That high there was 1985. I mean, scrolling further back on this, you've got a massive inverse head and shoulders, haven't you?
Yeah, yeah. But even sort of like if you think about it as well from the two swing lows, that's a potential double bottom if we break.
If we take that out.
If we just take the 147 out, yeah, it's not far away now. And that double bottom would lead to a move to around 220 if the lows are around about, well, what the lows are around about 75, high of say 150, 225.
Yeah, so that
Measured move
inverse head
target.
and shoulders measured move target is up at around 176.30.
Yeah, there's nothing that tells me that the US are going to be superseded by anyone in terms of how they're aggressive they're cutting the rates at the moment. There's going to be more. It's and the economy feels a bit doom and gloom, so there'll be more panic. And this is the sort of like the stance they're taking. They're sort of raising interest rates, so it's just a race to the very bottom.
Yeah, so I'll just keep it focused on US dollar today, unless there are any requests for any other currencies. We'll wrap it up there and move on to the indices now. And as you would expect, we are seeing a bit of pain there too. So looking at the ASX 200, first of all, let's just go back to the dailies actually. So this continues to move lower, trading in the downtrend, as we know. Failed into this level here on a number of occasions, and prices have continued to make lower highs. And we are very much on the back foot, down by 1.42% at the moment on the ASX. So that's pretty much the worst performing index out there today. No signs of that slowing, and you would not bet against a revisit of the the June 22 lows down at 64.10. So it looks to be one-way traffic headed there for now. China, let's just take a quick look at that. So again, we've got lows from earlier in the year that are the obvious targets for us to look for in the short term. Prices, really sort of grinding lower. Lots of red on the chart, no signs of it slowing. I would ultimately expect a retest of this level and then potentially even lower. If we take a look at the European markets, if we take a look at the Euro Stoxx 50, this is a massive level of support here around 33.85, which has been testing on a number of occasions and so far done a pretty good job. But we are coming very close to that level again if we just kind of draw a band of support, because there are a number of lows in here as well on a closing basis that we can take into account. And we're pretty much there. We have seen a bit of a reversal intraday, but I wouldn't be getting excited about any of these reversals until we see any sort of big volume accompanying these moves, and at the moment we're not. So 33.85 is the big level to watch. A close below that, and really we're looking for much lower prices. Similar situation with DAX. We've seen that fall straight into this major support here at 12,436. Number of touch points previously. Below that, we've got a 50% fib level at 12,130. No signs of it slowing, I don't think. We may see a little bit of sideways price action in the meantime, but ultimately I expect this to break because the economic conditions aren't getting any easier. Nasdaq, still got a way to go before that reaches the lows that we saw in June 22, but that was down at 11,035. And again, I don't think you can back against it. There's a sequence of lower highs here and potentially going to be a sequence of lower lows if we take out this low from the 16th of June. S&P 500, we did have a 38.2% fib level, which is so messy now. I'm not even going to consider it really as a level. We saw the rally take place from the June lows up to the 61.8% fib level, and since then the selling has just pretty much persisted. We've seen a few efforts at moving higher, but they all get sold into in pretty aggressive fashion. So now looking to target these lows again from June at 3635, and then going to take a look at the Dow, because that is pretty close already to these June lows in this 38.2% fib level at 29,788. The ultimate low in June was at 29,672. So I guess if that gets taken out, then we're looking for a move down to the 50% Fibonacci retracement level at 27,578. And if we just scroll back to the entirety of the rally that we saw from the height of the pandemic to those highs, a 50% Fibonacci retracement. Again, I think would still be quite a healthy pullback, but obviously because the rally was so magnificent, it is going to feel very painful getting down to that level. And you wouldn't bet against it at the minute, I don't think.
No, definitely not.
So that's that for the indices. Unless there are any other requests, we'll move it on, because it's all very doom and gloom. And maybe Jamie's going to round it off with even more.
Yeah, I was going to say, not a lot I can do to really change that narrative. Digging into some of the stocks, it's just more doom and gloom, really. But we haven't done this for a while. Let's start off with our biggest gainer and loser of the day. Our biggest loser was this PIXY, or Shift Pixie, down 36.55%. I was having a look at a longer term chart on this, and when it IPO'd, well, I'm not really sure what's going on here, but it IPO'd at about $29,000, got all the way up to about 44,000, and now trades at 13. I'm not really sure what's going on, but that's quite a fall. If we drill down to a daily chart, you can see recently had a stock split, which seems overdue, perhaps unnecessary at this stage. I don't know what was the split actually. Okay, 1 to 100, all right. But yeah, so down 36%. Let's have a look if we can find the information on this. Here was it SLNG? No, it's Pixie. Where's Pixie? No information. I think it's doing the weird trading view thing where it shows me the wrong one. But we'll move on to our biggest winner of the day, and that was SLNG, up 73%. I'll have a look at this. Here we are. That's SLNG. So it's won 70% this afternoon earlier, climbing almost 139% to reach highest level since November 2017. after saying the US Department of Energy has authorized the company to export the equivalent of 51 billion cubic feet of liquefied natural gas per year. The new federal order has a term of 28 years. It's a big number. It's a big move up, 73% on the day. We'll jump into a heat map. Start off, I've got a monthly heat map, so this is the performance of the S&P throughout September. Had to check what month we are in then. And yeah, pretty horrible stuff. I mean, most stocks down 10% plus. Tesla the only one that's really holding up. It's a bit of an anomaly at the moment, plus a couple more smaller names. But yeah, Amazon, Google, Microsoft, Apple all down heavily. Bringing that to a weekly chart, so let's see the weekly performance. Similar kind of story with Tesla the only one really holding up. Netflix had a strong enough week as well at 7% up. And looking at yesterday in particular, pretty much everything was down on the back of the rate hike. Tesla down 2.5%, Amazon 3%. So yeah, doom and gloom, it does continue. We'll look at some of these individual names, but before we do, I wanted to look at a couple of graphs I found to do with the stock market in September and the average returns that we get. Hopefully you can see this okay. This is the S&P average monthly returns from 1871 to 2018, and September is a historically weak month, the only month where it's averaged negative returns. And if we look at more recent years, let me see if I can make this a bit clearer. Sorry, this might not be super clear, but what this is just a more recent version of what I just had. So it's got, you can see September and August here, past since 1950, past 20 years, past 10 years, and post-election years. You can see September and August have both been down pretty hard. October and November, though, historically we have seen a bit of a rally, up 2% plus over the last kind of 10-20 years on average. So maybe we'll get a bit of a rally into these months. Hopefully, there you go. That's not all doom and gloom. That looks positive.
I think
Just
with
gotta get
October, from what I saw and have read previously, I think October is the month that's more prone to a market crash than any other month, because we've seen the
yeah,
sort of huge crashes in the past more often than not have happened in Octobers.
yeah.
So although that paints a positive picture, it's certainly not a straightforward one.
No, of course, and obviously this is just an average. So, but yeah, I think you're right. I think most of the big crashes have happened in October, 1987, and some of the ones before that too. So, yeah, well, I was trying to spin it slightly positive, but you are right. So let's see. Maybe it'll be 2% up. Maybe we'll have a crash. I mean, flip a coin. We'll see. Let's look at a couple of these stocks though. We haven't done this for a little while. Starting off with Apple, we put out this idea for Apple a couple of weeks ago. Hit profit quite nicely before selling off quite aggressively. Down 2% yesterday, hanging on to this 50% fib level we can see here. The next target on the downside, let's extend this fib out. What else have we got? Bit of a confluence of trading here, so I think that 61.8 fib is the next target for me. Holding up pretty nicely overall compared to a lot of these other stocks we'll take a look at. But yeah, it's pretty bleak overall. Alibaba, why have I got this? We broke out of a short-term kind of head and shoulders continuation. I'm not sure that's a technical name, but you can see here we had a bit of a left shoulder, a head, and then a much smaller right shoulder before we got the break of the neckline and sold off aggressively yesterday, reaching one of the lowest levels we've had since all the way back in May. We thought we might get a bit of a recovery on this at some stages, but not to be, at least not for now. Trading at $81. Ford had a pretty aggressive sell-off too the day before yesterday. Actually, I think it was down 12% on this pretty heavy volume as well. There was some news out about Ford. Let's see if I can quickly find it. Where are we? Here we go. Where is it? I'm not sure. I can't find it at a glance. But yeah, down 12%. Filling this gap that was open on the 27th of July on the back of the last earnings success really. But yeah, looking pretty rough here as well. Not much good to say there. Google, similar story, reaching the lowest levels now we've seen since, I mean, it's broken through this confluence level, which we highlighted is quite important. I mean, I've been off for a little while. It actually first broke through this shorter term support level since I've been away at 105. Now breaks that key psychological $100 level, and if we get a weekly close now, kind of anywhere here and below, things are looking pretty bleak with the next target down at $89. So yeah, we're seeing these levels, which, like I say, we haven't seen since start of 2021. So not looking great there. Meta, similar kind of story. We're moving down. We finally had that convincing break of the 61.8 fib from Meta's all-time existence. That goes from the lows back in 2012 all the way to the highs, all-time highs, I should say. And yeah, we got the break of that on a weekly chart. Looks pretty convincing as well. You can see high volume on that, closing right near the low of the week, and we're sending off more this week. Where to next? The 78.6 fib is a fair bit lower, but I think there'll be some buying attempted before then. We're at the pandemic lows now. We've got 2018 lows here as well, so there will be some buying, but I still think very negative looking technical picture here for Meta Platforms. Microsoft, these charts all look quite similar at the moment. We're just reaching new lows that we haven't seen for a long time. Breaking through this support level. Let's get this to a daily chart. So we bounced off this support level a few times, tried to break it here, but it was a bit overextended on the downside before rallying up. Not a lot of volume on this rally. You can see at the bottom here. And then when we've had this sell-off here, the volume started picking back up. So that shows to me that we are in this short, medium-term bear market on Microsoft. And yeah, for the moment, looking pretty bleak. You can see a number of these high volume days. And I think I've said this before, but you can see we've had some green candles here, but the way I like to look at volume is whether the close of the day is below the close of the previous day. So that's why these volume bars are all red. We'll quickly answer a couple more. I'm taking a little bit of a while. What's this? Micron, yeah, reaching new lows again since October. We noted this double top we had back here. I think we must be close to getting to this. We've still got a fair way to go before the measure move targets hit, but yeah, a pretty nice technical pattern there that we had this clean break and the retest of that previous support level. So that was quite a nice technical trade there. Neo down 10% yesterday, not much more to really look at here. Couple of resistance levels holding up. There's a lot of supply getting in the way of this moving any higher. Nike, same story. We've not quite broken this recent low, but it looks pretty ominous to be broken. And then, yeah, new lows since the back end of August 2020. Novavax keeps on going lower. We've looked at this a few times, down at $25 now. Next levels really we're looking at are, we've got this 2260. Guess we've had some support there. It could actually be a little bit higher. It's not perfectly drawn, but around this level here, nothing really to suggest that's going to change anytime soon. We'll do three more. Again, Pfizer. Look, we had this pretty key support area. It wasn't really too well defined, but you could see price was trying to stabilize around this $45, $46 level. Broke that pretty convincingly and moving lower now. Next level for me, we're looking at is kind of this bar of support here, around $40. Do two more. Peloton. We had quite a nice just short-term bounce here. Buying this support level, we did hit profit before the sell-offs continued. Now it's looking to me like a head and shoulders again. Not your classical pattern of it being a reversal, but you can see the bulls tried to regain control of this and are now really struggling with price returning to this support level. I'd certainly wouldn't be looking to long this again at this level now. It looks right to be broken at some point soon. Finish off on Tesla, and Tesla has been holding up pretty well, all things considered. If I had a chart comparing this to kind of S&P 500, which I can't remember. I'll tell you what, I'll bring up quickly. Is it relative ratio? Is that what it's called? I think it is. So you can see that it has performed very well against the rest of the S&P 500, putting in higher lows. So yeah, this is not a bad one to finish on. I guess it's a bit positive. Resistance is holding up though quite nicely at about 313. But if the broader market sells off aggressively, then I'd be surprised if Tesla doesn't as well. Next levels we're kind of looking at, you can see this level here would be the first where I'd expect some buyers to come in, then slightly lower down at 253, and then these lows down here after that. But yeah, I can't add too much optimism at the moment. I think there's certainly a bigger sell-off incoming before we get any real signs of a turnaround, and that could be quite an extended one, I feel.
Okay, just coming back to FX quickly, because in the last 10 minutes, the Swiss National Bank have had their policy decision that was out at 8:30, and as expected, they've raised interest rates by 75 basis points, taking the overall rate to 0.5%. So that's literally just come out, and it's having a pretty big effect on a number of currencies linked to the Swiss franc. So look at Aussie versus the Swiss franc. This is the daily chart. Prior to the decision, we were talking about new lows being made there, but a pretty strong reversal taking place at the moment there. Take a look at CAD Swiss, similar situation, big move to the downside, but a pretty strong reversal candle now being posted on all of these currencies linked to the Swiss franc. So we are seeing Swiss franc weakness as a result of this announcement that's just come out. So potential there, if they can hold on to these gains towards the close of the session, that maybe we will see a bit of a turnaround there. But yeah, be careful. Lots of volatility out there at the moment, and obviously they'll be digesting the news of that over the coming hours. Okay, anything else, guys, to add before we move on to the gun to the head trades?
No, nothing to add.
Okay, so been a while since I've done this, but I've not kept track of the results while I've been away. So what I'll do is I'll update our spreadsheet to make sure we're up to date with this. But basically what we do each day on the video is pick live trades with the idea that they hopefully will make a return between now and 9 p.m. UK time. Each of the ideas that we publish must have a stop and a target. They're all placed at market, and they're all published directly to our TradingView profile. So if anybody wants to check them out, you can do that very easily by going to signal_center on TradingView, and you'll be able to see how previous ideas have gone. So just go to our profile there. This is us streaming live, but all the ideas are here for you guys to check out. So who wants to go first? I've had a little look through, and yeah, not a lot that interests me at the moment, but the game is we've got to find something. So Steve, you got one ready?
I haven't, no.
All right.
I'm happy to go first if you want, Joe.
Okay, go on then, Jamie.
So I'm actually taking a look at XRP today, and I know Steve did look at this and suggest, it's looking quite strong compared to some of the other cryptos. But in terms of an intraday idea, which expires at 9 p.m. tonight, I've noted that we are at a bit of a resistance level on a daily chart. You can say way back in May here, this level we're at currently did provide some resistance. So if we go down to a shorter term chart, we've tried breaking it a few times and not been successful. I'm again just hoping for one more kind of test at this level before a bit of a sell-off. If not, I can keep my stock really, really tight and just get stopped out for a 1 hour loss, which is, it's not ideal, but that's kind of, it's to be expected. So no big issue there. And if it does pay off and we do get the sell-off that I'm hoping for, we can make a good multiple on top of that. So I'll give it a little bit more room, but we'll look to sell XRP at current price, which is, let me see, 0.42098, 0.42098. There we go. We can keep the stop. I'd expect maybe a bit of a wick to come up here and try and take out a few people waiting at this level, but we'll give it a fair bit of room. Fair bit's not really, but I like it. 0.4385 for the stop loss. I'm going to target this previous resistance level all the way down at 0.3603. There we are. So if that does pay off today, we're making 3.46 on that one. Looking to short XRP.
Cool. I was attracted to cryptocurrencies really as well because I couldn't see much value in anything else. But this is Ethereum. So this is the weekly chart, crudely drawn on a top pattern here, broken down through that, rallied into resistance, which has stopped the upside really, and big engulfing candle posted last week. So that's the weekly time frame. If we take a look at the daily, I've highlighted a head and shoulders top here. We've gone through the 61.8% fib level of this move higher here. The next move down for me is towards the 78.6 at 1126. So that's going to be my target on the trade today. And if we drill down into the intraday charts, we've got a bit of a bearish channel going on here at the minute. It's not perfect, but this previous low here from the 19th of September was taken out. Looking for a retest of that. It's currently trading at 12.74. I'm going to put a stop loss just above the high of the breakdown candle that we saw at 10 p.m. on the 21st. So that's going to be at 13.19. And as I said, I'm targeting this 78.6% fib level that we just highlighted on the daily chart, which is 11.26, giving a potential return of 3.26R on Ethereum today. So that's my trade of the day, which I'll get published up right now on the profile.
Okay,
Steve,
nice one. Yeah, just looking at a short-term stall in oil. Oil, I'm bearish on it overall, but we've seen a couple of higher lows posted. Bullish engulfing candle posted at 2 o'clock last night, and we're getting a nice bullish candle now. So I'm looking for just a small recovery, stop just below the low. So the stop's at 82.10, getting in at 83.42, targeting a move to 86.06. That's my gun to head trade idea.
Perfect. So there's 3 trade ideas that we will get published up to the profile. So if anybody wants to follow the progress of those, please feel free to do so on the TradingView channel. Okay, so for the rest of the day, central bank action is pretty much still front and center. So we've got the Swiss National Bank, which we already know has come out. That was out at 8:30, and it was a 75 basis point rate increase. At 9 a.m., we've got the Norges Bank policy decision. The forecast there is for an interest rate rise of 50 basis points, taking the overall rate to 2.25%. So if you're looking at any Scandinavian currencies, then you may want to keep track of that one. That's due out in 13 minutes. Then at 12 o'clock UK time, we've got the Bank of England policy decision. They face a tough call, as we know. Overall expectations are for an increase of 50 basis points. So anything more aggressive than that, then we could see a substantial amount of volatility. There are some commentators that believe 75 basis points is on the table and that the Bank of England could be more aggressive to try and tackle inflation. So be aware of that at midday today. It's not going to be easy out there in the financial markets. And then at 1:30 UK time, we've got the US jobless claims number. Obviously, we're coming off the back of the Fed decision yesterday, and they will be looking at all data points to try and forecast what they're going to do with monetary policy. So pretty much every number that comes out in the US at the minute is a live one and likely to create some volatility. Then over the weekend, we've got the Italian general election. Obviously, further potential there for uncertainties with regards to the political stability of maybe Italy and what effect that could have on the Eurozone. So lots to keep us interested. Everything feels live and potential to create substantial volatility. So please do be careful. Anything to add, gents?
No, nothing to add.
Okay.
Be careful out there.
Yeah, indeed. Yeah, glad to be back. Hope everybody enjoyed it this morning, and we'll be back with another episode tomorrow.
Cheers.
Take care, everyone. Bye-bye.